All right. So for top-down analysis, this is what we were looking at the other time. So we saw price move all the way from here. Let's start with this. So price move all the way from here. We had price moving here, some supply here. Price tapped into it and then went up. So this was a demand zone space. So when it finished, it went up. The later price came back to retest it, touch into that demand, go up from there. Then we had this. Price was moving here. There was some little stuff here. All of this went up here. Then we broke through. So we also have this upon. We had that one. There's a mitigation there of that demand. This was the inducement. There's the inducement. After that, we went up. Some supply here. There's a big supply, a big pocket of supply. So came down, tapped demand in here, went up here, broke structure. Our broke structure, we had a little inducement, and there, this was the supply area where we had supply before. So should expect that price should come into that zone. And then price tapped into it, and then we went up. So next thing we expect to see now is price come down into a demand zone, and from there we move up. So what do we see here in this case, this recent price action? We see that after before price even took out this inducement, we were moving up. So we moved there and there was some form of supply in this area. We had some supply here that price was reacting to. And so by the time we finished coming down into demand and picking demand, we had the price react to the supply the first time around. This one pinched into it, and then there was a sell back. But the good thing is the sell did not end up in a bearish candle. So that means that bullish guys were still optimistic and they were ready to take over the space. And so we have this happen, price has already touched into that supply. And so from here, we see that they sold again, and this time around into this candle. And this candle was the one that started the whole move to mitigate supply. And when price did that, price touched into this candle, mitigated the demand in this candle, and then went up. And then from there, we had a little sell, and then we bought from here. There was a supply that price encountered again, and now we have to see what price does in coming to a demand that will help us to continue this movement. And now since we have something that have broken the supply that was here, then that means it is this candle that we are coming into soon. So we should expect that price should come into this candle anytime soon. So now, before we do that, we would like to look into what price has done on daily, weekly, and 4-hour time frames. So we'll see what price has done then. So by the way, before we do that, if you can look at this, you see that what this one has done is that this low, the low of this this particular month's candle, has failed to break structure to the upside, and so we can see that it is selling. So there's going to be sales happening there. There's going to be sales happening there. So we should expect that price is going to sell to take out this low into this demand. And besides, we already see that we were going to be bearish for the month because of this price gap. So now let's go to weekly. We go to weekly, and from there we see all of this supply much more elaborately. We were seeing all of this supply happening here, and this was where it pushed from. Price swept, price broke, and then we had an inducement, and then price went up here. So we should expect that price should come into this zone soon, because why? We still have demand here that has not been mitigated. We already swept here. We already swept here, and we already broke structure around here. So all of the structures that were here, we broke it. And this was where it happened. So there was an inducement, and then we went up, and now we are coming back to take this liquidity, and we will, we will now so we can now have a look at what price does there. So weekly and monthly inducements. Okay. So weekly and monthly inducements. And so we have that having gone up there and all of that. So we should expect that this low will be taken out very, very soon. We still have this one here. We should expect that low will be taken out soon. And so let's go to daily. So we begin to have a look on all time frames, from the higher time frames to lower and lower time frames, till we are able to find an area of demand where we can put an entry, and from there, you know what to do. So now we've had this strip, and then we had what looked like another liquidity sweep here. And so from there, we had price move up like this, some supply here. Price broke, took out that liquidity, and then we had this tap into some little demand, even though that was not the full demand. So price is not touching to the full demand. So the next thing now is to find out where our POI could be. And so we see that price did not fully tap into the demand zone, which was here, because why? We already swept this high, we took this high here, and then we came here, swept liquidity, we didn't break structure, so this high was going to be taken. And then we had price buy into this, price tried to buy, and then we failed, they sold, but still there was a demand here that price was reacting from. So we bought again, failed, price tapped into this demand this time around. And so now that we have a red candle reacting from demand, so that red candle now becomes our demand this time around. And so we bought again, failed, price now tapped into this zone, and so from there we can now move forward. From there, we can now move forward. And so we tapped into that, and we broke structure, took this liquidity. We had a little retest, and then we went up. And so now we have this liquidity to be taken now. And so soon enough, we should expect that price should come into here, because this supply was what they were reacting from. And so we could also, bring our POI closer into here, and then to identify with this particular candle, which was the supply in the previous case. And so from there, we've already identified that one. So our POI begins to get smaller and smaller. And so let's have a look and see what else we can get from here. And so we have on 4 hour now. On 4 hour now, we see all of this eye that failed to break structure, the price trying to break through and score and take out this eye. So we saw that it failed initially, and then it tapped into demand, which was here. Demand was here. And then after tapping into demand, it went up a little bit and came back again, used the same demand leg. So the demand that was here was powerful, because despite the fact that it didn't take out this eye, it was still able to pick demand here and build up from there. So price tapped there, and then we went and broke structure, and then we went up, and then we took out this high. Now I want you to look at something. When price was moving from here, it was using this as inducement, because why? We have this movement here. There was a supply that was here that price was reacting from. So so when price was able to break through that supply, this one that was able to break through the supply, which was around here, now becomes our range low, and whatever high that price begins to uh, retrace from, that becomes the range high. Because from here now we saw that price was still able to move upward here. Now when we saw that price was avoiding this high, so we now have a range low to high in here. We have a range low to high in here. And so this was inducement, according to what I explained. So this was inducement, and there was this candle that we were looking at. This candle here that we were looking at. And according to what I explained the other time, on 30 minutes time frame, you see why price was able to use this candle, because we had a lot of rejections around this candle before we pushed up. There was a lot of battle, buyer seller battle, and so we had to move from there to so price touched into there and moved upward. So now what are we looking to see? We've seen that when we went up here, we had some reactions here, and price was able to find demand in this area. Okay, I was able to find demand in this area. So if we are going to identify our POI, the next thing now is to pick this area as our area of demand. And why are we doing that? We are picking it because the first time around, price tapped into demand here and was able to go up, encounter a small supply here. Okay, price reacted from that supply, and this time around reacted big time heavily from that supply, and then pushed up into this small supply here. So there was another supply that was around here that price reacted from. So after pushing, it was able to push through and buy. And so now that this low has been able to move up like that and do all of this. So and so far, this low has failed to break structure to the upside, but still it was still able to tap into this to some form of demand and continue. And so we now have a trend line of liquidity around here. I have trend line liquidity around here. So we should expect that price to sweep this low into some demand. And we expect that the demand should be here. So we expect that the demand should be here because this particular low has failed to break structure to the upside. So we should expect that price should take it out and come down here into this demand and then pick up from there. So if we are going to pick our POI of where we are going to have an entry, then we could be looking at this place. Now we've had price take out some supplies that were around here, and then we broke through some structure here. So if we are going to pick a candle or pick an area, then this will be the area we'll be looking at, because why? There was some rejection around here, a little supply that price was reacting to in this place. So after price reacted from there and bought, we saw that okay, we were able to blow through it, and this was the candle that did it, which this was the one that reacted to supply and was able to buy and break through whatever supply that they had in all of this area. And this was the same candle that price had to find support from to be able to go up high there and do whatever it did. And so this is our candle. This is our focus. So this is our focus. So if we are going to pick a POI to buy from, then this candle is definitely the one. This candle is definitely the one to have a look at. And so if we are going to take the position on a prop firm, then yeah, sure. It is a worthy area of demand. So if you look at it on 2 hour, you begin to see it more clearly, and you have an understanding that okay, if you are looking to get a much smaller entry, then maybe you can go on lower time frame, but still we still see the same thing. There was all of this supply here, and then we had price rejects from this supply the first time, After I rejected from there the first time, we have price go up here, take out whatever supply was here. After I did that, price swept down into this and then went up there, and then we had all of this consolidation before the breakout. So this is our area of interest. Yeah, this is our area of interest. So you can see all of this that happened there. So that was why I was saying the other time that this is a zone of demand. So now let's go to 1 hour. Let's see what 1 hour has for us. So we see what price did here again. I'm still going to illustrate what why we had a demand zone here. So we see what price did again. We sold down after all of this. There was a supply that was pushing price down heavy. We had a little pullback here, which was a reaction to further supply. And then we had some demand that pushed it from under, and then we have this. And if you look at this, you see that there was a demand that was here. The price reacted from. So that was the demand that price reacted from. Use this one as inducement. Use this one as inducement. Then price tapped into that demand, and then from there we had another inducement, and then price tapping into the demand here. And so demand was being transferred, and so we went up here. We bought, price sold, bought again, and then we bought. And so we have this happening here. So we have that zone marked out. That zone marked out. So we should expect that price should come into here. Now let's go to 30 minutes. So on the 30-minute time frame, we can see that price already swept this. Price went higher. There was some reaction here. We bought, there was a rejection, they sold, then price, there was a sell again into the demand zone. So whatever breaker block was here has already been mitigated by this candle. And so from there, we had this one happen. Price go up here, got rejected, a little one here, and then we bought. And so we had some reaction to this, some reaction from here, and then up and up and up we went. So if we are going to have price come into anywhere soon, we now have a better zone to look at, because now this one still carries some demand. This one still carries some demand. Price might come into this candle or not. There's a possibility of that. It might come into this candle or not. And we know that this one is holding some form of demand still, because we had all of this sell side liquidity that was here that has not been mitigated. So we should expect that price to come and mitigate it. Now, when I was talking about one candle here being an area of demand, you can see what we have here. You see that price was around here, moving up here, and then we had some movement here, and then we broke. And then you still remember that we have a supply on the higher time frame. The price was reacting from this. Price was reacting from here. And when this one went up, we tried to buy, and then there was a sell. And there was this same zone that price was respecting, because they couldn't sell further. They couldn't sell further to take out this or to take out whatever. So we bought again, and then we sold. There was another sale, but there was still some level of demand in this area that was preventing sellers from prevailing. So after that one, then a little battle occurred, and after that we have another small battle, but eventually we were able to buy. So you can see from here that we tried to buy, and then they sold, then they bought again, then we tried to buy again, and then they sold, and they were able to close here. So there's demand inside of this candle, and so we bought, and we went up there, and then we went up there, and so price came back and used this candle as a demand. But you very well know where the main demand is, which is here. And so we bought, and then price tapped there. And so eventually when price came back into this candle. Price came into this candle. and that was why we were able to use that zone as an area of an area of demand. So let's just see what we have. The price does around here. Let's see what price does around here. Price was reacting to something here. Price was reacting to something here, which was some form of demand. Let's see. We had okay. We had a little supply. We had a little supply around here that price reacted to. We had this one to react to it. So I'm tempted to like bring this POI to this level to pick this area. But then the best thing I would do is just wait out and see what price does around there. But then I still have this POI. The only reason why I'm looking at this is because of all this SSL that we have around here. So price might still want to use this particular candle, this one that rejected from supply. Might still want to use it and say that okay, this is our zone. It could say that. So, but then we still watch and see what price does. So that would just be it. That was just me. So that's how to do top-down analysis. That's how to do top-down analysis, and now we are waiting to see what price does around here. So, so that's it. That is top-down analysis.